CNBC TV 18, celebrating 16 years of business leadership.
Hi, welcome back to the show. Well, 2015 has almost come to an end now, so we asked our experts to list out some of their top picks for 2016. Take a look.
Indian Hotel is one of those companies which did not create wealth in the last 10 years. Maybe they might have just met the inflation at best. So there are various aspects. One is industry-related the challenges. Another one, I believe, it's a management was not very dynamic in creating wealth for the shareholders. So those two aspects are changing. There's a turnaround happening in this business. It's a very large company with around 116,000 rooms in 130-40 kind of properties.
Okay, fair enough. Mr. Tulsian, let me start with you. Let me go to you next. You've been having a love affair with these auto ancillary companies all year, and you've picked out a couple of stocks. So start off with your first stock.
See, my first stock is MCX. In fact, I've chosen, let me first take a little deviation from the auto ancillary. You are right that I have auto ancillary also. But first stock I have chosen is MCX. In fact, let me first make the multi-bagger concept very clear, Anuj. What people or investors loosely call multi-bagger, for multi-bagger you need to have a time horizon of maybe 2 to 5 years, because you cannot expect a stock to maybe quadruple, triple or double in 1 year. If it is happening, that's your luck. But as a fundamental analyst, if I'm giving a call of maybe 30-40% an annualized return, though my all 4 stocks have an expected return of about 50% in this 1 year, that is on 2016. But if all those 4 stocks are held for maybe 3 to 4, 5 years, they can, keep giving you a return of maybe 50%, 40%, 30%, and that's how in maybe 2 to 3 years they will get qualified as a multi-bagger. So my first stock is MCX, Multi-Commodity Exchange. If you see right now there are 12 commodity exchange and the consolidation is all happening. The regulator has shifted from FMC to SEBI. So there was transition for last 1 year and there was lull in the business activity. No new clearances of the options and all that have been given. This premier commodity exchange is having a market share of 80% plus. If you quickly come on the market capitalization sub 4,400 crore, company has a net worth of 1,200 crore. And that 1,200 crore, entire 1,200 crore is into the cash and cash equivalent, that is yielding the annuity income. What they run in fact, it's a negative working capital business. They have 400 to 500 crore as a working capital, which they as a settlement guarantee fund and all that from the member. And as I said that because of the transition having happened from FMTC to SEBI, no new business has come to this exchange. In spite of that, in FY15 and FY16, they will be having an EPS of 25 rupees.
Prakash Diwan, welcome to the show. Plastic Blends, that's an interesting name.
I know, so I thought let me deviate from all the auto and stocks that we keep on talking about every day and then get a flavor of something new. And what's interesting about this entire sector, and we've been noticing that specialty chemicals is becoming a very clear India strength and a story which is in sync with the Make in India campaign. For example, Plastic Blends, if you take this instance, they are one of the largest manufacturers and exporters of batches of additives and compounds which are called thermoplastic compounds, which go into colorations for plastics. And they make batches. This is not an assembly line business, so China doesn't come in the way. You have very high environmental issues in Europe, so there's no competition from there. And these guys have expanded globally so smartly with immense pricing power coming to them. And it's part of the Colside group. The Cabras have been around for a long time, have a very good reputation in the market. And Plastic Blends is available at just one-time sales market cap, which is for 500 crores. The EPS growth that we've seen and going forward, which is expected, I wouldn't be surprised if they've already notched up the entire year's EPS in the first 2 quarters. And that's kind of getting the momentum in. If people were to do a simple multiple for an exclusive premium business like this, it could be about 18-20 times of the next year's EPS FY17. The stock could give you a 50% upside. If you wait for another year, it will probably be 800 plus. So it's got that momentum in its favor.
Let's talk about something entirely different, media. You've picked up HT Media today.
Yeah, in fact, I picked up HT Media. The main reason was in the last couple of months, whenever you open the newspaper in the morning, before you reach the headlines, you normally have to pass through 3, 4, 5 pages of full-page ads. Where does that go? That goes to the top line of all these companies. So that was one of the reasons why I picked up HT Media. But then at the same time, if you dig a bit deeper into it, they have nearly 1,600 crores worth of investments into Hindustan Media, which is again a group company. What is the market cap of HT Media? 2,000 crores. They have a decent exposure to digital media, which is the fastest growing. And there you have other companies quoting at 40, 50 PE, but no one really wants to give discounting for HT Media. They have about 1,000 crores of cash and cash equivalents. So actually, at the current levels of 85, 90, you're actually getting the media business free. I don't think you really can ask for anything more than that.